In this video, we are going to talk about one of the biggest financial aspects of raising children, and that is what financial products you should get after having a child. We will rank them according to importance so that those of you who have a limited budget can prioritize what to get. But of course, disclaimers first. This is strictly my opinion and how I plan for my clients. There are people who may disagree, and there are people who will plan differently, and that's perfectly fine. Because planning something is definitely better than planning nothing. So without further ado, let's head to the list. Firstly, and most importantly, you need to get hospitalization insurance for your children. And I believe every financial consultant you meet will tell you the same thing. Hospital bills are not cheap, and with babies it can be complicated because they cannot tell the doctor what is wrong or where they feel pain. All they do is cry because they're babies. This, combined with their immature immune systems, means that hospital bills and insurance premiums for babies are more expensive. So getting an insurance policy to cover your children's hospitalization expenses is the most important. You don't know how much their hospitalization bills will be, but by getting an insurance policy to cover that, you substitute the unknown amount in terms of bills for known amount in terms of insurance premiums. And that can be a huge worry off your back. Number 2 on the priority list is something that is often overlooked, and that is to increase cover for you and your spouse. Many parents rush to buy stuff for their kids, be it clothes, toys, or insurance policies, but they often forget about themselves, which is understandable. I mean, which parent wouldn't do anything for their children? But I have to stress that taking care of yourself is the best gift that you can give to your children. I've had many clients tell me,
"Oh, I need to buy all these policies for my children. I need to make sure that they have everything they need."
And I've lost count of the number of times that I had to tell them,
"Yes, I know you love your children, but we have to take care of you first."
Because if anything happens to you or your spouse, your children might not be able to survive. There are a few ways for you to increase your coverage, and we are going to rank them according to free, cheap, and not so cheap. For the free increase of cover, you will need to have an existing investment-linked policy with insurance coverage. Despite a lot of negative publicity, one of the best features that an investment-linked policy can give to you is its flexibility. For most ILPs in Singapore that have insurance coverage, there is an option for you to increase your cover without increasing your premium. Of course, this will affect the value of your policy and how much you can withdraw from it when you retire. But if your budget is tight, this is one of the best options. You can increase your cover without paying more. If you don't have an ILP with insurance coverage, the next cheapest option is to get a term policy. Term policies give you cover for things like death, total permanent disability, and critical illness. They don't have any cash value inside, which makes them cheaper than your whole life policies or investment-linked policies. But if nothing happens to you, you don't get any money back at the end of the term. But hey, you get the peace of mind that if anything does happen to you, your family is well taken care of. And personally, I'd rather pay the premium and have nothing happen to me than actually claim from it. The third way to increase your cover is via whole life policy. This can be in the form of an ILP with insurance cover that we have mentioned earlier, or it could be in the form of a traditional whole life policy. Both have their pros and cons, which I will not cover in this video, otherwise this can go on for really long. But the essence of this third way of increasing your cover is this. You get covered and you also get cash value inside the policy, which can be used for your retirement or your children's university fees. Which brings me to the next product that you should get for your children, and that is something for you to save for their university education. Now, I am a beneficiary of my parents planning for this early, so I didn't have to take a student loan or pay a single cent for my university degree. So I can tell you that it is important for you to give your children a head start in their careers. Because paying back student loans in the first few years of your career is not fun. It delays a lot of your plans to get married, to buy a house, etc. etc. And given a choice, you don't want your children to experience that. Education inflation is high, and a university degree 20 years from now can easily cost you $100,000. Planning ahead will give you and your children a lot less headaches. There are two main ways for you to plan for this. The first is via endowment policies. These are lower risk and have a guaranteed portion in their returns, but they don't fetch fantastic returns most of the time, so you may have to save more every year. The second way is via investments. This can be done either on your own with your shares, bonds, and whatnot, or can be done in an investment-linked policy without any insurance cover. The risk level varies according to what form of investment you choose, so I won't be going deep into this topic. But I do have to say that all investments come with risk, so don't take up more risk than you can stomach. If you have a limited budget and cannot hit the goal that you want to, it's better to take up something that's within your risk appetite and fall short of your target than to take up something that is outside your risk appetite and feel really uncomfortable about it. Last but not the least is insurance cover for your children. Now, I have to stress that putting this last doesn't mean that it is not important. It is. And ideally, you will want everything that I mentioned in this video to be covered. But I also understand that not everyone has enough budget to cover everything, which is why I'm doing up this list to show what I feel is most important to the least important, which I have to stress again is still important. There are two reasons why I feel that insurance coverage for your children is less important compared to the other three: probability and impact. If given a huge sample size, the probability of critical illness or death or permanent disability happening to parents will be higher than it happening to children. I'm not saying that it will not happen to children. There's just a lower chance compared to parents. In terms of impact, the consequences of parents passing away is a lot more devastating than that of children passing away. Now, I'm not downplaying it or saying that it will not hurt, because losing any family member is painful. The point is, ideally you will want your whole family to be covered. But if you have limited budget and you have to choose between covering yourselves or your children, I would recommend covering yourselves more. To end of this video, I want to say that this list is not exhaustive. There may be other aspects that I have not covered, and this is a very generic list that I feel applies to most people. And of course, there are financial products that can cover multiple purposes. For example, an ILP with insurance coverage can help to cover yourselves as well as save for your children's education. So you might not need to break the bank to buy multiple policies. What's important is finding a consultant that can understand your needs, your budget, and then plan accordingly. With that, thanks for coming to the end of this video. Sending you lots of love. See you in the next one.